Successful individuals cultivate habits that unsuccessful people tend to avoid. Warren Buffett, in an interview with Bloomberg, emphasized the significance of habits, noting their impact on health, personal life, and financial well-being. He highlighted how negative financial habits often go unnoticed, depriving individuals of opportunities for wealth accumulation. According to Buffett, while eliminating bad money habits might be challenging, it's possible to replace them with beneficial ones, thereby enhancing one's financial standing. To delve deeper into this topic, continue watching this video until the end. Warren Buffett's unique approach to life and wealth has captivated the world. Despite his immense fortune, Buffett maintains a modest lifestyle, residing in the same house he bought in 1957 and preferring simplicity over extravagance. His journey to financial success began in childhood, where he demonstrated entrepreneurial spirit by selling various items door to door and cultivating a love for reading, particularly about investments. Despite being a prominent figure in the latter half of the 20th century, Buffett remains active in the 21st century, closely monitoring market trends and offering valuable advice to aspiring investors. He emphasizes the importance of timing and wealth accumulation, stating that patience often outweighs intelligence in financial matters. Buffett's success isn't merely attributed to his investment prowess, but also to his financial habits. Let's explore some of the key habits he advocates. Smart spending, a principle championed by Warren Buffett, transcends mere frugality to encompass a strategic and mindful approach to financial decisions. Buffett advocates for evaluating potential purchases not just in terms of their immediate monetary cost, but also in relation to their long-term value and impact on overall financial health. He encourages individuals to consider the opportunity cost of each expenditure by calculating the hours of work required to earn the money needed for the purchase. Moreover, Buffett advises against impulse buying and urges individuals to prioritize spending on necessities while scrutinizing discretionary expenses. By cultivating a habit of smart spending, individuals can optimize their resources, avoid unnecessary debt, and allocate funds towards investments that align with their long-term goals. This approach fosters financial discipline, resilience, and a sense of empowerment, ultimately paving the way for greater financial stability and prosperity. Putting money to work, as advocated by Warren Buffett, entails more than just saving. It involves strategic investment to maximize returns and preserve purchasing power. Buffett emphasizes the importance of understanding the mechanics of investment and gradually building knowledge in this area. Rather than letting savings languish in low-yield accounts, he suggests exploring various investment options to grow wealth over time. While Buffett acknowledges the potential risks associated with investing, he emphasizes the importance of taking calculated risks and learning from both successes and failures. By starting with basic education and gradually delving deeper into investment principles, individuals can develop the skills and confidence needed to make informed decisions in the financial markets. Additionally, Buffett advises against hasty investment decisions and urges individuals to approach investing with patience and discipline. By consistently learning and adapting to market dynamics, individuals can effectively deploy their capital to generate sustainable returns and secure their financial future. Thinking differently, a principle championed by Warren Buffett, transcends conventional wisdom and encourages individuals to seek innovative solutions and opportunities. Buffett's approach underscores the importance of avoiding herd mentality and embracing independent thought. By challenging conventional norms and questioning established practices, individuals can uncover unique insights and perspectives that may lead to significant breakthroughs. Buffett himself is known for his contrarian approach to investing, often capitalizing on market inefficiencies and undervalued assets. He advises against blindly following trends or popular opinion, advocating instead for critical thinking and independent analysis. Buffett's success demonstrates the power of thinking differently and the potential rewards that come from daring to be unconventional. By fostering a mindset of curiosity and openness to new ideas, individuals can unlock untapped potential and chart their own path to success in both personal and professional endeavors. Continuous learning, a cornerstone of Warren Buffett's philosophy, extends far beyond formal education and encompasses a lifelong commitment to self-improvement and intellectual growth. Buffett emphasizes the importance of expanding one's knowledge base and staying abreast of developments in various fields, particularly finance and investing. He dedicates several hours each day to reading and studying, demonstrating his belief in the power of education to drive success. Moreover, Buffett advocates for a broad-based approach to learning, encouraging individuals to explore diverse subjects and disciplines. By cultivating a curious and inquisitive mindset, individuals can gain new perspectives and insights that may inform their decision-making and contribute to their personal and professional development. Additionally, Buffett underscores the value of practical experience and hands-on learning, urging individuals to seek out opportunities for real-world application of their knowledge. Through continuous learning and self-improvement, individuals can adapt to changing circumstances, seize new opportunities, and ultimately achieve their goals. Avoiding debt, a key tenet of Warren Buffett's financial philosophy, involves exercising prudence and restraint in financial matters. Buffett cautions against unnecessary borrowing and advocates for living within one's means. He emphasizes the importance of financial discipline and warns against the pitfalls of accumulating debt, which can hinder long-term financial stability and impede wealth accumulation. Buffett advises individuals to carefully evaluate their expenses and prioritize essential purchases over discretionary spending. By avoiding high-interest debt, such as credit card debt, individuals can minimize financial burdens and allocate more resources towards savings and investments. Moreover, Buffett encourages individuals to cultivate a habit of saving and investing regularly, thereby reducing reliance on debt to fund expenses. By adopting a conservative approach to borrowing and managing finances responsibly, individuals can safeguard their financial well-being and pave the way for long-term prosperity. Attention to detail, a hallmark of Warren Buffett's approach to financial management, involves meticulous scrutiny of expenses and investments to optimize resource allocation. Buffett advocates for a thorough examination of even the smallest expenditures, recognizing their potential impact on overall financial health. By paying close attention to details, individuals can identify areas where savings can be realized and inefficiencies eliminated. Buffett's adherence to frugality extends beyond personal expenses to his business ventures, where he scrutinizes every aspect of operations to maximize efficiency and profitability. Moreover, Buffett values transparency and accuracy in financial reporting, emphasizing the importance of thorough analysis and due diligence when evaluating investment opportunities. By cultivating a habit of attention to detail, individuals can make informed decisions, mitigate risks, and ultimately achieve greater financial success. Long-term thinking, a fundamental principle in Warren Buffett's investment strategy, entails adopting a patient and disciplined approach to wealth accumulation. Buffett emphasizes the importance of viewing investments through a decade-long lens rather than seeking quick profits. He advises against succumbing to short-term market fluctuations and instead advocates for steadfast commitment to sound investment principles. By focusing on long-term trends and fundamentals, individuals can avoid the pitfalls of speculative trading and capitalize on compounding returns over time. Buffett's own success is attributed to his ability to remain resilient in the face of short-term volatility and stay true to his long-term investment objectives. Moreover, Buffett underscores the importance of consistency and perseverance, encouraging individuals to stay the course even during periods of market uncertainty. By cultivating a mindset of long-term thinking, individuals can position themselves for sustainable wealth creation and financial security in the years to come. Emphasizing health and relationships, as advocated by Warren Buffett, underscores the recognition that true wealth extends beyond monetary assets. Buffett emphasizes the importance of maintaining physical and emotional well-being, recognizing that without health, success loses its meaning. He encourages individuals to prioritize self-care and invest in activities that promote overall wellness. Additionally, Buffett places a high value on nurturing meaningful relationships, believing that genuine connections enrich life's experiences. He emphasizes the importance of surrounding oneself with supportive and trustworthy individuals who contribute positively to personal and professional growth. Buffett's emphasis on health and relationships serves as a reminder that financial success is only one aspect of a fulfilling life, and that true wealth encompasses physical vitality, emotional fulfillment, and meaningful connections with others. By prioritizing health and fostering strong relationships, individuals can lead more balanced and fulfilling lives, regardless of their financial standing. Boldness and decision-making, integral components of Warren Buffett's success, involve taking calculated risks and making tough choices with conviction. Buffett's approach to decision-making is rooted in thorough analysis and a deep understanding of the underlying factors influencing an outcome. He encourages individuals to assess risk carefully and act decisively when opportunities arise, rather than succumbing to indecision or fear of failure. Buffett's own career is marked by instances of boldness, such as his early investments in undervalued companies and his decision to acquire struggling businesses during market downturns. Moreover, Buffett emphasizes the importance of learning from mistakes and embracing failure as a natural part of the learning process. By cultivating a mindset of boldness and decisiveness, individuals can seize opportunities, navigate challenges, and ultimately achieve their goals with confidence and resilience. Daily planning and reflection, as endorsed by Warren Buffett, are essential practices for achieving success and maintaining focus amidst life's complexities. Buffett emphasizes the importance of setting clear goals and priorities, then systematically organizing tasks to accomplish them. By dedicating time each evening to reflect on the day's progress and plan for the next, individuals can gain clarity on their objectives and identify areas for improvement. Buffett advises creating a roadmap for the following day, outlining specific tasks and deadlines to guide productivity. Additionally, he underscores the value of regular self-assessment, encouraging individuals to analyze their actions and outcomes objectively. Through consistent planning and reflection, individuals can cultivate discipline, enhance productivity, and make incremental progress towards their long-term aspirations. These practices serve as a cornerstone for personal and professional growth, empowering individuals to navigate challenges and achieve their fullest potential. In summary, Warren Buffett's success stems not only from his investment acumen, but also from his adherence to prudent financial habits. By incorporating these principles into one's life, individuals can pave the way towards financial prosperity. Remember to subscribe to our channel for more insights on finance and wealth building.